Hey folks, I'm Tina Hui with Follow the Coin. We are the homepage of digital currency. Welcome to this snippet of BITNEWS. We've got some unfortunate news to report this week. And the Bitcoin price is dropping. The Bitcoin price, which was at 585 USD, is now currently around 511 and 516 USD. After staying steady in the range of 580 USD for most of spring, even amongst anxiousness surrounding the proposed BitLicense, a regulatory framework for virtual currency firms by the New York State Department of Financial Services, also known as the DFS, announced back on July 23rd of 2014. This is fast becoming the worst week for the digital currency this spring. Why is this happening? Details and discussions are popping up all over the Bitcoin ecosystem about the risks that the introduction of complicated trading techniques added to the global Bitcoin market, which is highly illiquid and fragmented, particularly in relation to growing discussions among traders of margin calls being imposed on large leveraged investors. Just Thursday, Circle Financial, a Bitcoin depository service, released a statement that it may in fact need to block New York residents if the BitLicense does get introduced. As the New York DFS's proposed BitLicense kicked off its 45-day period of notice and public comment gets close to its half-life, and we all inch even closer to the end of the period on September 5th, companies and virtual currency enthusiasts, both big and small, are definitely beginning to feel the heat. Thousands of public comments have been made online and offline, and even officially petitioned. While all is not lost, since the rules are subject to additional review and revision based on the public comments before the DFS finalizes them, the climate is definitely looking gloomy in the digital currency space as the hours keep ticking by. And the outcome in hopes that a revised rule that is mutually beneficial remains uncertain. The general hope is that some of the regulations will be revisited to become less vague and damning for companies in the space, and fingers are definitely crossed worldwide. Circle Financial's acknowledgement of how they are preparing to comply with the BitLicense is amongst one of the first indicators and definitive public comments from prominent companies in the digital currency space in response to the BitLicense, speaking to the impact that the proposed ruling will have on its business should it become a reality. And things are not looking pretty. A lot of companies just emerging in the space, and those that are already major players, will have a lot of complicated hoops to jump through if the BitLicense does indeed get a green light, especially as it is currently written. According to analysts, if the margin calls are true, it would mean that the combo of the update from Circle and these technical factors could lead to a cascading effect of self-reinforcing sales as price drops trigger automatic sell orders needed to repay margin loans, which also create a cycle in turn in which the new declines lead to additional margin call triggers. What is margin investing? Margin investing is a staple of stock investing. Margin investing is a strategy where an exchange purchases securities on an investor's behalf and provides a loan to finance that investment. The leveraging of this investment strategy can increase returns on an investment if the price goes up, but it can also increase losses if the price goes down. And if that price falls to such a level that the investment is in the red zone, which means big trouble, the exchange that lent the money and purchased security on the investor's behalf will demand that the investor put up more money or collateral. And if that isn't obtainable, the exchange will often automatically sell the asset, which of course just leads to a terrible domino effect. Now back to margin calls and how it affects Bitcoin. Earlier this year, Hong Kong exchange Bitfinex started offering margin trading services to Bitcoin investors, which led to a couple of Beijing-based exchanges offering versions of the same. Now, several Chinese and Hong Kong exchanges have also introduced Bitcoin futures trading, automatic algorithmic trading, and the ability for bearish investors to short sell the digital currency. All of these services and strategy are not foreign to stock or foreign exchange trading and investment, but they were not available to the digital currency market until very recently as the market demand and needs grew. And bit by bit, technology emerged to include Bitcoin. And this is a good good thing. Over time, these features can eventually enhance stability in the Bitcoin market, as the capacity to take positions on either side of a trade allows people to cover their risk with hedging strategies. But as the Wall Street Journal noted yesterday, Bitcoin is still a very thinly traded market, perhaps maybe even made thinner by summer trading effects. Bitcoin is also a highly fungible asset that can be easily transferred anywhere in the world, ensuring that price effects in one exchange will quickly be reflected in others. Now, this is where a landslide begins and creates issues. In situations of erratic or negative movement, instead of enhancing stability, margin trading can create exaggerated price movements everywhere. So in a market like Bitcoin, where pump and dumps do occur, and even a single one that's big enough can trigger huge changes in the Bitcoin price, and where things are too illiquid to count on buyers stepping in at lower prices, margin call triggered price declines can continue for quite a while. And worst yet, all that's needed to trigger these self-perpetuating responses is for someone to have an excuse to sell. And boy, is the climate ripe for reasons to sell Bitcoin right about now. In addition to concerns over New York's BIT license and other regulatory initiatives, Bitcoin 2.0 startup Ethereum announced on Friday that they're going to start converting some of the almost 27,000 Bitcoins it received from a recent fundraiser to dollars, adding steam to concerns about the price. In addition to that, BTC China, China's largest exchange for the virtual currency, announced Wednesday that they will stop accepting Bitcoins in yuan, China's local currency. This news led to a fall in the Bitcoin price by 18%, and with trading at as low as $422.50 earlier in the day. In fact, BTC China had to temporarily stop its yuan account recharging functions in light of their announcement. The stopping of new deposits being accepted prevents new Chinese investors from piling more yuan into Bitcoin. This in turn eliminates some of the demand. This reluctant announcement is most likely a result of the People's Bank of China, the nation's central bank, telling third-party payment processing firms to stop working with Bitcoin exchanges on Monday, following their announcement earlier this year that they would not allow financial institutions to sell, trade, or store Bitcoins since it does not consider BTC to be a real currency due to it not having any legal status or monetary equivalent. This is definitely something that many Bitcoin enthusiasts would argue, but still, that happens to be China's stance. Other financial regulators have also cracked down on Bitcoin, with Denmark's Financial Supervisor Authority saying this week that Bitcoin and other virtual currencies do not qualify as real money guaranteed by a central bank. And unfortunately, Norway has also echoed this sentiment. And as Tyler Moore, a Southern Methodist University assistant professor in computer science, has been quoted in USA Today stating that the currency that is supposedly beyond state control is actually still within the grip of governments who want to assess the risks of this new technology. The U.S. has so far taken a hands-off approach to Bitcoin, with the exception of anti-money laundering enforcement. But other countries are taking a tougher line, partly because there are few consumer protections built into the technology. Individual investors typically buy Bitcoin through online exchanges, which store the currency in an account on their behalf. And according to Moore, if that exchange disappears or shuts down, there may be no recourse for getting your deposits back, since there's no organization like the FDIC to ensure deposits. As USA Today states, Bitcoin is supposed to be beyond the reach of governments, but some central banks and financial regulators are cracking down on the virtual currency or questioning its status. But don't panic, folks. Even though these setbacks are pretty heavy, Bitcoin as a community is still very engaged and strong. Adoption of Bitcoin is growing, as is country, state, government, and bank level attention to Bitcoin. Add to that the fact that the companies in Bitcoin are maturing and fast. Grab a chair and join the discussion. We can all help Bitcoin as a community get past these growing pains together. Follow the Coin has been covering quite a few rants, interviews, and petitions to the BIT license draft and framework, which includes consumer protection, anti-money laundering, and cybersecurity rules for virtual currency. And we will be continuing our coverage on any comments from either side of the fence as things develop. If you have a position or anything of the sort or a comment to support either side, please do submit them to us. just email us at team@followthecoin.com and we'll consider them for publication. While the rules are overreaching, some speculate that the vague language and strictness were necessary to encourage discussion and a collaborative trimming of the rules to match the needs of the market and public that the BIT license will impact. This is the period in time for public comment. A compromise can be made yet, so don't give up hope. Alright, that's it for this update. As always, follow us on Twitter, like us on Facebook, leave a comment with any questions or feedback, and of course, if you've got a quick second, check out expresscoin.com to purchase Bitcoins, Dogecoins, and more. Bye guys!